Rates go up, market goes down. Let's talk about it. Hello everybody, Joe Warbeck coming at you, and today Fed Chairman Powell announced a 0.75% rate increase. We knew this was going to happen. The markets knew this was going to happen. They had priced in a 0.75% increase, but what they wanted to hear from Powell was that he was going to reduce the rate increases in the future, not stop them altogether, but the markets wanted to hear him come out and say, in December, I'm going to raise them 0.25 or 0.5, and he refused to say that. So as we can see in this chart, when the announcement came out that the rate increase was 0.75, there was some talk that maybe he was going to reduce the rate increase in December. And we saw the markets respond positively, but unfortunately, during his press conference, he refused to comment on what the rate increase would be in December. Here's what he said in a nutshell so you don't have to watch it. He said, I'm going to continue raising rates until such time as inflation comes back to around 2%. He did say he's raising rates at a much faster rate right now, and eventually he will start raising rates at a smaller rate, but he gave no indication of when that would occur. He said they will be looking at data every single week between now and the next meeting, and at the next meeting they'll decide at what rate they will increase rates. We know they're going to do it. We know rates are going to continue to go up. What does this mean for you? It means I wouldn't be borrowing money right now. We can see mortgage rates have hit 6-7% from about 2-3% just a year ago. They're up a lot, but this isn't really affecting home prices. I've said this. I have a video that home prices are not going to fall. What we're seeing is there's still a significant demand and a small inventory. So according to the Case-Shiller Home Index, which tracks home sales, we can see that the price and the sales of homes have only come off slightly, down about 1.5%, which is good news when mortgage rates have climbed at that level and home sales are still moving forward. There are parts of this country where home prices are still going up. There are parts of this country where home prices are starting to fall, but not dramatically. We've seen 20-30% price increases in homes. If it falls 1 or 2%, we are okay. You are okay. And the reason I don't believe it's going to fall even more is because people out there are not going to sell their homes right now. Why? Because mortgages are too expensive. I think once Powell stops raising rates, once inflation gets under control, he's going to start lowering rates. He's going to get back to a norm, and at that time, it'll be a great opportunity for you to borrow money again. Is a 4 to 5% mortgage crazy? Not at all. That's the norm. 7-8%, that could be a little too high. I may not recommend you borrow money at that level, but 4 to 5% is a good place to be getting money for your house. So the markets did not like what Powell had to say. The S&P was down 2.5%. The NASDAQ was down about 3.5%. And again, even Powell said this, the markets are pricing in the future. The markets are pricing in what they think he is going to do in the future and reacting ahead of time to what they believe is going to happen. We will have to wait and see tomorrow and the next day to better understand how this is going to all shake out. But let's talk about the positives. Unemployment still at 3.5%. That means that everybody who wants to have a job has a job. People's overall income is up, and we are drowning in cash in this country. We have seen an 80% increase in money market values. Currently in the US, there's over $5 trillion sitting in cash. It's just waiting for the right time to move to cash to some sort of investment. Will it be real estate? Will it be the stock market? Will it be to grow people's businesses? We don't know yet. It's just sitting on the sidelines. Look at that. Just a few years ago, the average was about 2.8 trillion, and it's ballooned up to 5 trillion. That means there's still a lot of cash out there that's going to be spent that will help propel this economy forward. But we still have inflation. Inflation is still over 8%. But why? What is driving inflation? Yes, cost of goods have gone up. Yes, labor has gone up. But what I've said on this channel before, and I have a little video I want to share with you, gives us a better understanding of what is truly driving inflation. Here we have Congresswoman Katie Porter, along with economist Mike Kunkel. I'm probably pronouncing his name wrong, so I apologize. Let's listen.
According to this chart, what is the biggest driver of inflation during the pandemic? The dark blue is the recent period.
It would be corporate profits.
And what is that percentage?
It is 54%, and that number does stay that level of high if you update that number to more recent numbers as well.
So over half of the increased prices people are paying are coming from increases in corporate profits.
Yes, the unit price index is reflected in corporate profits as opposed to other costs.
And how does that compare to historically to other periods of inflation or over other periods of economic time?
As reflected there and in other analysis, it is significantly higher in this recovery, 11.5%.
And what is it today?
53%.
So as you just saw, over half of our inflation is caused by corporate profits. Look at corporate profits over the last decade. We've seen them increase by over 70%. That means that corporations are making 70% more on your dollar than they were making a decade ago. Heck, not even a decade ago, than before the pandemic. We're just going back a few years. It means that this inflation is not fully caused by COVID. This inflation is not fully caused by the amount of money the government created. Yes, that has a lot to do with it, but we're seeing corporate greed, we're seeing corporate profits drive this. So that's why I'm so confused, because corporate profits are at a 70-year high. Unemployment is at a 70-year low. We're seeing cash sitting on the sidelines. In the stock market, all it seems to care about is interest rates. Why? Why are interest rates the driving force? I need everybody to take a deep breath, realize money is going to have a cost to it. It's good for you. It's good for the economy. We have to get used to it. It's here. Powell's not going away. He's going to keep raising interest rates. Now, next week we have an election. That is going to be a deciding factor for what is going to happen to this stock market for the rest of the year. Could we go positive? Will we fall deeper into negative territories? We'll have to wait and see, but make sure you check back here when I give you coverage on what the election means for you and your dollars. If you like content like this, make sure you hit that subscribe button. Make sure you check back every week. Check out some of my other videos. Leave a comment down below. I read them all. I appreciate them. And as always, thank you, and I'll see you next week.